So when we look into cash flow, we are also looking into performance already. However, a different kind of performance. So let's get started with cash flow. Ladies and gentlemen, so far, if you can follow me, please say yes in the chat. Good. Now, before we move on to cash flow, I just want to show you guys a few things because this directly ties into our cash flow topic. Now, can someone please guess my EG's CCC, cash flow conversion cycle, is negative 687 days thanks to their very late payment to their supplier. Whoever programmer outsource software company work for them, quite sad. But well, can you guess whether if the company's cash flow, their cash, the actual cash, not just your profit, is strong or weak? Can someone please tell me, strong or weak? You see, I pay my receiver, my supplier 800 plus days later. I get paid by the government 160 days later. Strong or weak cash flow? Yes. Very strong cash flow. And go up all the way to cash flow statement here, right underneath your balance sheet. You can see that cash flow is positive every year. Not only positive every year, increasing some more. Can you imagine increasing cash flow? Increasing cash flow is tougher than increasing revenue. Increasing revenue, you just do more business using AR, accounts receivable. Profit, you want to increase your profits, just sometimes, pay lesser, return some labor. But to increase your cash, to collect the cash from outside, not so easy. So more or less from CCC, you could tell that this company's cash flow is actually pretty strong-ish. All right, so let's take a look at the next one. Can anyone guess Genting Malaysia's cash conversion cycle? Just guess, just guess. Positive or negative? Positive or negative? Plus VE, negative VE, minus VE. Just guess. Check. Try out your understanding of business. All right, cash conversion cycle. Let's take a look. Cash. You see, I don't straight away scroll. What I do here is I Control F. Control F. You can see the top right here. Then this will all show. I look for cash conversion, and I'll just click enter. So cash conversion cycle for Genting Malaysia, congratulations, is negative. Why? But now COVID-19 become positive. Think about it, Vianney. Genting Malaysia would have sent you some email, especially if you're a VIP, I don't know what they're called, and say that, hey, why don't you book your hotel in the next 3 months, in the next 6 months, I give you a very good rate, 30% discount. And if you, let's say, put in a bit of money to top up your chips, I'll give you another 10%, 20% more chips. Money come in first, and they serve who? They serve who? No need to order the food, no need to pay OT. They serve who? They get you to pay first so that you enjoy in the future. Okay haven't booked, I don't know that one, but obviously they getting receivables now. How can you dispute the numbers? Maybe I don't know whether if you it's gonna get worse in the future, but right now that's what's happening. Now this is an interesting one. Can someone please guess what is happening to Airasia? Can someone guess? Negative or positive right now? Negative, positive right now. What do you think is happening to Airasia? I want you guys to guess. Think about it. Think about it. You must have taken Airasia before. You must have gone through, at least, go to their website. You have at least flew before. What are they doing right now? Can someone please share a bit of your experience? Are they doing well? Or is that relevant? Okay. So obviously they are not doing so well because they have no business. But hey, still got 2.8 billion in 2020, right? So the point is, what is Airasia doing? They offer advanced tickets. Yeah. Offer advanced tickets up to how many? How long? How long? 1 year? Think so. Because I don't care about their emails. And then what else are they doing? They're doing big pay. And what do they do? There's big pay. Basically, take your cash, convert that into big pay points or whatever they call them, and basically becomes another way for you to hold on cash into their company. So, what is happening for the cash conversion cycle? You're looking at cash conversion cycle of negative. Now, of course, this is one way to look at it. Hey, look, not bad. It's quite good. Now, if you take a look at the cash flow, now it's a totally different story. Their operating activities is negative 2 billion right now. So why? Because at the end of the day, I want you guys to see that your cash conversion cycle does not show you one thing: business performance. It only shows you health. So I want to see revenue growing. CCC negative, because cash conversion cycle doesn't show you how big the business is. You understand that, ladies and gentlemen? Yes or no? Tell me in the chat. Good. What tells you business performance? P&L. What tells you business performance? Cash flow. That is the reason why when I talk about cash flow, it makes looking into AR and CCC less important. That's why we focus on what AR and CCC would explain, which is cash flow right now. This is the third financial statement and the last one that we'll be talking about today. It is basically the net amount of cash and cash equivalent being transferred into and out of a business. Now, the reason why we analyze the cash flow is to understand the company's liquidity. So you can say that the company's cash flow is like the performance P&L and the health balance sheet half. I'm looking at the performance as well as the health. My cash flow is useful like that. Again, not many people read into these. They always stop at what is a net cash, but they don't look into, let's say, cash flow percentage. They don't look into what is capex or what is free cash flow. They always stop there. Therefore, it doesn't react to the market. The market doesn't react to the cash flow. But over the years, you can always see cash flow affecting the company's future. And that is exactly why cash flow is important. It affects the future again. So what are we looking for when it comes to cash flow? It's very simple. Again, because of accrual basis, accrual accounting, cash flow sometimes is extremely different from a P&L. In order to double check on your P&L, make sure your company is not like Saipa. You are always looking at cash flow to make sure that the company's cash is at least the same, if not higher than P&L. All right, so this is basically the cash flow's purpose, to make sure there is performance, to make sure it is healthy. At the end of the day, it also tells us about the company's future.